Hi everyone, welcome back to the second video of accounting equation. Today in this video we are going to solve this full-fledged problem. But before watching this video, please make sure you have watched the previous video of this where we have discussed the entire concept and the logic of this accounting equation. Asset is equal to liabilities plus equity or capital, and we have discussed everything related to it, right? What it means, what's its history, yeah, everything we have understood. And also we have discussed the expanded accounting equation, right? We have seen how this equity thing or capital thing is expanded, right? And the most important part over here was that, revenue and expenses, they affect the capital or equity. Whenever you have income or revenue, you have to add to the capital. Whenever you have expenses, you have to deduct from the capital. Okay, that's very important. We will see this in this full-fledged example also. And then we took a practical example also over there, a simple example to understand everything. And then we concluded the video with this, that I said whatever we add to one side, the same thing has to be added to the other side. Yeah, then only it will be LHS is equal to RHS. Asset is equal to liability plus equity, right? Whatever treatment you do on one side, the same treatment has to be done on the other side. Plus x, minus x, minus x. Okay, and there can also be a nil change. Nil change means what? The change will only be there only on the asset side. Yeah, minus 10,000 plus 10,000, like that. Okay, yeah. So this was the first video. Now to understand each and everything, of course you have to go and watch that. Now let's get back to this video and let's see this question. Now see here, prepare the accounting equation on the basis of following transaction. So here we have been given these 10 transactions and we have to prepare the whole accounting equation. Okay, so let's analyze each transaction one by one. See here, it's very simple. Simon started business with cash 1 lakh. Very simple transaction. Think from the business point of view. What is happening? Cash is increasing, which is an asset, and capital is also increasing by 1 lakh, 100,000. Isn't it simple? We all know that. Let's move on to the second transaction. Purchase goods from Mahesh of 25,000. Now the first thing you have to determine is whether it's a cash transaction, yeah, or it's a credit transaction, whether we have paid cash or we are promising to pay in future. Credit transaction. So now here, see here, nowhere cash word is written. And the second thing is Mahesh, the person from whom we have purchased the goods, the inventory, that person's name is also coming, right? So why are we noting down the name of the person from whom we have purchased? Because this is a credit transaction. This is a credit transaction. We have to pay to Mahesh in future. So Mahesh is our what? Creditor, payable, liability account. Yeah. So liability in the business is increasing, liability to Mahesh, yeah, Mahesh account is increasing by 25,000, and we have received goods, inventory or stock, whatever you want to call it, that is also increasing. Is that clear? Yes. Fine, you got that. Let's move on to the third transaction. Now in third transaction, what's happening? Purchase goods for cash 5,000. Now in this third transaction, it is specifically mentioned the goods are purchased for cash. So goods are increasing and cash is decreasing because you have paid the cash 5,000. Clear? Fine. Let's see fourth transaction. Sold goods costing 10,000 to Raif for cash 14,000. Now this is a bit tricky transaction to understand. See, it's very simple actually. See, sold goods costing 10,000. So what has happened in the business? Goods costing 10,000 have been reduced. So from inventory, from stock, you have to reduce 10,000. Is that clear? Yes. And then you have received the cash. Yeah, the Raif name has come, but still this is a cash transaction. Raif is not important for us because it's a cash transaction. Person name is not important. We have received cash of how much? 14,000. Goods inventory has been reduced by 10,000 because that's the cost of it, and cash is increasing. We have received cash of 14,000. What does that mean? It means that 4,000 is the profit, isn't it? 10,000 was the cost. You have sold at 14,000, so that means 4,000 is profit. Now, who has the claim on the profit in the business? Of course, the owner has the claim on the profit, isn't it? Yes. So that is why what will happen here, understand properly, three things will happen. Goods are reducing by 10,000, and then cash is increasing by 14,000, and then capital will increase by 4,000. Capital will increase by 4,000. Then only the equation will balance. You'll practically see this, don't worry. Fine. Okay, you got that right. How it will happen? Fine, let's move on to the next transaction. Withdrew cash for personal use 10,000. What's happening? Withdrew cash for personal use 10,000. That means the owner has come into the business, yeah, to the shop or whatever it is, the place of business, and took out 10,000 from the drawer. Okay, took out 10,000 for his personal use, not for the business use, for personal use. That means owner is taking the money home. See here, what is capital? Capital is the claim of the owner in the business. If owner comes and takes out some money, that means the claim of the owner has decreased in the business. Capital has decreased in the business. Yeah, so that is why this 10,000 is what? This is drawings. Yeah, drawings. So what you will do of this? Cash is reducing in the business, cash is reducing, and capital is also reducing. Okay, because you all know in the basic video I've explained to you, drawings acts against the capital. Whenever drawings happen, whenever owner withdraws the money from the business for his personal use, then what will happen? Capital will decrease, because drawings ultimately decreases the capital. Is that clear? Yes, you got that. Okay, so cash decrease, capital decrease. Fine. The sixth one, invested in shares 9,000. So here what will happen? Invested in shares 9,000, that means cash is reducing. Yeah, 9,000 money you have invested in shares. Yeah, you have an investment now, so that is why cash will reduce and shares investment will increase. One asset will decrease and another asset will increase. Is that clear? Nil change actually in this. Fine. Then the next transaction, purchase furniture 20,000. Very simple. Now here understand, purchase furniture 20,000. Is it a cash transaction or credit transaction? This is a cash transaction. Whenever the question is silent and names of the any person or any company name is not mentioned, that means it's a cash transaction. Okay, if it was a credit transaction, if it would have been credit transaction, then they would have mentioned exactly purchase furniture 20,000 from Mohan, yeah, purchase furniture 20,000 from Santosh, name would have been mentioned. But now here there is no name, nothing. You have to assume this is a cash transaction, and it is a cash transaction. Is that clear? So what's happening in this transaction? What's the impact? Cash is decreasing by 20,000 and furniture is increasing. There was no furniture in the business. Now furniture from 0, it is increasing to 20,000. Is that clear? Right. The next transaction is, see here, paid to creditor Mahesh in full settlement of 23,000. Come back. What does this mean? Come back. See here. The second transaction, purchase goods from Mahesh of 25,000. Here what happened? We got goods from Mahesh on credit. Goods increased and Mahesh liability also increased 25,000. We have to pay to Mahesh 25,000. But then what happened? After some days, see here in the 8th transaction, paid to creditor, yeah, payable Mahesh in full settlement. What does full settlement means? It means that the account is completely finished. Mahesh account is completely finished. We had to pay 25,000, but Mahesh told us, see, let's say, yeah, our name is Simon, right? Yeah. So see, Simon, you don't have to pay me 25,000, just pay me 23,000 and it's over, right? That's what Mahesh said to Simon. So Simon paid him 23,000 and it was a full settlement. So understand properly what is happening to our business. Our business is gaining by 2,000, isn't it? See here, we had to pay 25,000. How much did we actually pay? Mahesh told us to pay only 23 and settle his account. So we paid only 23. 25 minus 23, 2,000 benefit, right? We have gained by 2,000. We had to pay 2,000 less. Yes, it's a benefit, right? It's an income, it's a gain, isn't it? This is called discount received. Yeah, this is called discount received. 2,000 discount received is there. It's an income. Fine. So what is the impact of this transaction? It's very simple. Cash is decreasing by 23. Cash is decreasing by 23. And Mahesh liability is decreasing by the whole amount. It's full settlement now. Full settlement. We don't have to pay anything in future. So the entire liability which was there in the books, 25,000 to Mahesh, that entire liability has to be scrapped off. Yeah, entire liability gone. And then in the capital what will happen? We have an income now. 2,000 benefit has happened. Income. What do we do of incomes and expenses? We give the effect of income and expenses in the capital also. So that 2,000 has to be added to the capital. So cash is decreasing by 23, Mahesh is decreasing by 25, and capital is increasing by 2,000, because that 2,000 discount received is an income and that income has to be added. We always add the income to capital. Is that clear? Because you all know expense decreases the profit, income increases the profit. So the profit which we calculate, who has claim on that profit? Of course the owner. So that is why in the accounting equation we directly give the effect of income and expenses in the capital. Is that clear? Yes. And then we have ninth transaction. See here, depreciation on furniture provided at 10%. Now what's depreciation? See, depreciation is very simple. It's nothing but a non-cash expense that we make every year on the capital assets. See, what happens is whenever you purchase any asset, right? Let's say you have purchased an asset of 10,000, okay? So you don't take this to profit and loss, okay? You do not expense this asset immediately. No, what you do is, because there is a future benefit of this now and it will be used for a long period of time. So what you do is you take this to the balance sheet, okay? And then as the time passes by, the asset will be used and the benefit of the asset will slowly fall, isn't it? Because as you use the asset will become, what do you say, it will wear down. Yeah, it will wear down. So that is why what we do is, over its useful life we expense the asset. For example, let's say 10,000 is the cost of the asset, and let's say the useful life of the asset is 10 years. So 10,000 divided by 10, so that is equal to 1,000. So every year for 10 years, what we will do, every year we will reduce the value of the asset by 1,000, and that reduction is called as depreciation. Slowly the asset will be depreciated, it will be reduced. Is that clear? And this 1,000, where it will go? This will go to the income statement as an expense, which will decrease your profit. Is that clear? So depreciation is a non-cash expense which will decrease our profit, and also the asset value will be reduced. Is that clear? Okay. So it's nothing but just expensing of the asset. Slowly over the useful life of the asset we expense it, we take that portion, that depreciation, to the income statement, to the profit and loss. Okay, fine. So what is the impact of this? See, the impact is really simple. Depreciation is an expense. There is no cash outflow because of depreciation. It's just an expense, acts against the profit. Okay, so it's an expense, and furniture value will also reduce. Now what is the calculation over here? See here, 10% they are saying. What is the cost of the furniture? 20,000. So 20,000 into 10%. Okay, 20,000 is the cost of the furniture into 0.10, yeah, 10%. That's equal to 2,000. So 2,000 will be taken to profit and loss. This is the depreciation every year. This is the depreciation. Okay, so 2,000 is the expense. So what do you do of expenses? You reduce them from the capital. Yeah, you all know that, isn't it? I've told you, whenever we have income or expenses, incomes are added to capital and expenses are deducted from the capital. So that 2,000 depreciation will be deducted from capital. Capital will fall because profit will decrease now because of depreciation. So that is why we will deduct. Okay, and furniture is also reducing. I told you, yeah, in the balance sheet first we take and then we slowly reduce every year. So furniture value will also reduce by 2,000. Okay, so that's the 9th transaction. And then the 10th transaction we have, see here, it's very simple transaction, received commission 5,000. Now what is this? This is simple income. We have received commission. Received means cash is increasing, 5,000, cash is increasing, and income also is increasing. Commission, yeah, commission is our income. So that income, where it will go? Capital. Again, capital, right? It's a revenue, income. So capital will also increase by 5,000. Then only it will be LHS is equal to RHS. Is that okay? Fine. So this was a summary, a basic analysis of this 10 transaction. Now let's just see how it will be presented in that accounting equation format. Now see here we have the solution. Let's understand how to do this. It's very simple. You have already seen the analysis of the question, so everything is finished for you. So see the accounting equation, asset is equal to liabilities plus capital or equity, right? And then you'll be wondering, what is this subheadings? Cash, stock, investments, furniture is equal to Mahesh plus capital. See, it's very simple. This is just the breakdown of the assets. What all assets we have in this question, what all liabilities we have in the question. That's the breakdown. Okay, simple. But now you will also wonder, sir, how will we come to know immediately in the beginning only, what sort of breakup we have? See, you will not know immediately. You have to go slow. What you have to do is you have to start with a small column, and then slowly as you will go on seeing the transaction, okay, this thing is there, okay, another column, okay, this thing is there, another column, like that you have to approach. Okay, not like in the beginning only you will see the whole question, okay, this thing is there, this thing is there, this thing is there, okay, 5, 6 columns. No, you will start with a small cash column or whatever the thing first you have. Of course you will have cash, you can start with the cash, okay, like that. And then slowly as you go on seeing the transaction, you will come to know, okay, stock is there, okay, investment is there, Okay, so start with the small columns and then go on. Fine. So leave space properly. You have to manage the space. Yeah, you will practice and then you will be able to do that. Fine. Okay, so the first transaction was started business with cash 1 lakh. So simple, cash is increasing, add in the cash, add in the capital. Clear? So when you will take the balance total column, 1 lakh is equal to 1 lakh. Clear? Yes. The second transaction was, see here, the second transaction, credit purchase of goods from Mahesh of 25,000. Mahesh is our creditor, liability, yeah, payable. So that is increasing, and goods means what? Stock, inventory, whatever you want to call it, right? So that is also increasing. So simple, stock column you will make plus 25 and Mahesh plus 25. Clear? Easy? Yes. And then see the total balance column, 1 lakh, 25, 25, 1 lakh. So it's equal, LHS is equal to RHS. Okay, fine. The next transaction, third transaction, what did we have? Purchase goods for cash 5,000. Now here I have just written the summary, okay, just summary, but you have to write the whole thing, okay, but here I did not have the space properly, so I have just written the summary. Okay, so cash purchase of the goods 5,000. So what's happening because of this? Stock is increasing by 5,000, inventory, and cash is decreasing by 5,000. No change on the right hand side. Yeah, in the liabilities and capital there is no change. This is nil change. Plus 5 minus 5. Is that okay? Yes. The next transaction is, see here, that tricky transaction. Sold goods costing 10,000 to Raif for cash 14,000. Now of course Raif name is completely ignored because this is a cash transaction. So what is happening? I told you, sold goods costing 10,000. So you will reduce the goods, you will reduce the stock by 10,000 only. Always remember, in the stock you will only deduct the cost price. Okay, always cost price. So minus 10. Fine. Is that okay? Yeah. So minus 10. And then see here, cash is increasing by 14,000. You have made sales now, so you will get the cash. You have got cash of 14,000. So plus 14 in the cash. Simple. Whatever that has happened, just put it in the accounting equation. There's not much technicality over here. Is that okay? Yes. So plus 14 you did, minus 10 you did. Then you came to know, see here, there is a difference. See, cost was 10. You have sold for 14. So 4,000 profit is there. Isn't it simple now? 4,000 profit is there. Who has the claim on profit? It is the owner who has the claim. What is the owner's claim? Capital. So you will increase the capital by 4,000. Is that clear? Then only it will be equal. See, plus 14 minus 10, only plus 4, right? So it is equal. See the total balance column, 95 plus 14, that is 1,09,000. 30 minus 10, that is 20,000. 1,09,000 and 20, that is 129. And see here, 25 you already had, so as it is. And then 1 lakh plus 4, 1,04,000. So 1,04,000 plus 25, that is equal to how much? That is equal to 1,29,000. 1,29,000. It will always be equal. Whenever any transaction happens, it doesn't matter. Any transaction happen, when you will see the accounting equation, when you will see the balance, it will always be equal. Asset is equal to liabilities plus capital. Is that okay? Right. Next transaction. See, withdrew cash for personal use 10,000. What is this? Drawings. Yeah. What happens because of drawings? Cash reduces, capital also reduces. By how much? Here 10,000. So see here, it's very simple. Fifth transaction, withdrew cash for personal use 10,000. So minus 10 from cash, minus 10 from capital. Because understand, owner has taken the money out of the business. So owner's claim, what is capital? What is equity? Owner's claim in the business. If owner is taking out some money from the business, then of course now you are an accountant of the business. You will reduce the capital, isn't it? Yes, that's what you will do. Fine. And then the sixth transaction, see here, invested in shares 9,000. Now when you saw this transaction, you came to know, okay, there is something called as shares over here. So you will write investments. Okay, that's how you will be making the columns. Not at the first only you will make 7, 8 columns like that. No, you will not do that. You will just leave space and you will slowly start with small columns, and then as you go on seeing the transaction, you will come to know, okay, this column is required, this column is required, like that you will approach. Fine, you got that. So invested in shares 9,000. Cash is decreasing, investment shares are increasing. Yeah, both are assets, so it's a nil change. See here, sixth transaction, invested in shares, so minus 9 in cash and plus 9 in investments. Okay, if you see the total column, the balancing column, 99 was there, minus 9, that's equal to 90,000. And then see 20,000 as it is, and then plus 9 was there, so that's 9,000, and here 25,000 as it is, and then 94 as it is. There is no change on the right hand side, only change over here, plus 9 minus 9. Is that clear? Because you took the cash and invested into shares. So cash reduced, investment increased. Clear? Fine. And then the next transaction, see here, the next transaction is seventh transaction, purchase furniture 20,000. Then this was a cash purchase, right? So furniture increase, new column came into the picture, okay, plus 20, and cash decrease minus 20. Is that clear? No change on the right hand side, as it is. So see the totals, 90 minus 20, that is 70, 20 as it is, 9 as it is, plus 20 is there, so 20 new total, and then 25 as it is, 94 as it is. No change on right hand side. Is that clear? It's very simple. And then the next transaction, see here, paid to creditor Mahesh in full settlement 23,000. Now this is also a bit tricky transaction. It's simple, don't worry. Paid to creditor Mahesh in full settlement, that means entire value of Mahesh will be finished off. Full settlement means the liability will be completely scrapped off. So Mahesh liability 25,000 is there, completely scrapped off. How will you do that? Minus 25, that becomes 0. Okay, that becomes 0. And how much did you actually pay? How much cash did you actually pay in the business? How much cash the business paid? Only 23. Yeah, 23,000. So minus cash only 23. From cash you will only subtract 23. 70 minus 23, that's equal to 47,000. 20 as it is, 9 as it is, 20 as it is. Now understand, there is a difference. Here there is minus 23 in left hand side, and in right hand side you can see only minus 25, right? So that means there is an inequality, right? So what does that mean? You are missing something, you are making a mistake, and that mistake is you are not considering the 2,000 discount which you have received from Mahesh. Mahesh told you, see Simon, you don't have to pay me 25,000, just pay me 23 and close my account. So you paid him 23, entire liability scrapped off, but 2,000 benefit is there to you. Yeah, the business is gaining by 2,000, so that 2,000 has to be added in the capital discount received, which is an income added in the capital. Is that clear? See here, minus 23, minus 25, plus 2,000. So minus 25 plus 2,000, that is 23 net. 23 net, isn't it? Minus 25 plus 2,000 is what? It's equal to minus 23. Minus 23. This in net minus 23. Okay. So whatever you subtract from from left hand side, the same thing has to be subtracted from the right hand side. Is that clear? Yes. The next transaction, depreciation 1. Depreciation of furniture provided at 10%. 10% of this furniture 20,000, that is equal to 2,000. So see here, depreciation on furniture 10%. What you will do? It's really simple, really simple. Depreciation is fall in the value of the asset, right? Every year we reduce it, right? The asset by depreciation. So see here we have furniture, right? So furniture value was how much? 20,000. So we reduced it by 2,000 because that was the depreciation amount. So minus 2,000. And it's an expense, non-cash expenditure. There is no cash outflow. Because of depreciation, there will not be any cash outflow. See, nothing has happened. You haven't paid anything. It's just that the value of the furniture is decreased by 2,000. Okay, it's an expense, non-cash expense. So it's an expense. That means the effect has to be given in the capital. Yeah, negative effect. So capital will also reduce by 2,000. Yeah, see here, capital will also reduce by 2,000. Is that clear? Easy? Yes. The next thing is, see here, the next transaction is received commission 5,000. Yeah, the last 10th transaction. So received commission means what? Income, cash is increasing by 5,000 and it's an income now. So capital is also increasing by 5,000. Is that clear? Cash is increasing by 5,000 and capital is also increasing by 5,000. Is that clear? So 47 plus 5, that's 52. 20 as it is, 9 as it is, 18 as it is. Yeah, 20 minus, there was 18 now. 18 as it is, 94 plus 5, that is 99,000. Okay, so this is how you will be doing the accounting equation. Now this was a full-fledged question, really straightforward. There is nothing much over here. If you just go on practicing in your book, then you will feel it's nothing. It's just that you just have to put the effect. You just have to understand income and expenses effect has to be given. Yeah, whatever it is, paid salary, paid rent, yeah, all the expenses and incomes effect should be given in the capital, and then these things are very easy. Okay, it's not a big deal at all. So that's it for this video. I think you have got this. It was a really straightforward question. It was not difficult. Okay, so that's it. See you in the next video. Bye.